Good Tuesday morning, traders and investors. Whiz here with our market SITREP. Going to be seeing two forces driving the market today. We're seeing some pretty weak news overseas. Last night we had very weak manufacturing data out of China, and this is about the fourth canary in the coal mine recently of macroeconomic data out of China that was weak. We saw GDP, retail sales, industrial production faltering, manufacturing is faltering. So China's recovery is really slowing down a little bit. About a month ago, they really the Chinese government put the speed brake out on housing, increasing mortgage rates, and the ability for people to buy second homes because they saw a real estate bubble ballooning, and now we're starting to see the underlying macroeconomic data in China really start to flash some warning signs here. The FXI, the iShares China 25 index is down significantly pre-market, which is I'm very happy about because we have a bearish double vertical spread in our primary trade alert model portfolio that's just going to absolutely crush it today. Put this bearish bet on China last week after we saw the weak GDP data, so very happy about that trade today. Also seeing some bad news out of Europe. Saw some weak numbers out of Germany last night, and obviously that's not good because Germany kind of drives, is more or less the banker for Europe. So manufacturing PMI out of Germany wasn't that good as well. France actually surprisingly came out with some good numbers, but Germany is the worry here. What's going on? During some recent meetings here in Washington, folks are starting to, in Europe, governments are starting to wake up and say, you know what, maybe these austerity measures are a little too tough, and they're starting to take a page from the Obama playbook of let's spend our way out of this mess. Some governments, such as Spain, are saying, hey, these forced austerity measures, trying to get down our debt to GDP ratio is really hammering unemployment. It's hammering our recovery. So they're kind of switching their sails back to let's spend our way out of this. Should be very interesting to see what happens over in Europe. But again, China's faltering, Europe's faltering, Japan is risking a downgrade. S&P came out with. So starting to see worldwide growth slow down, which is not good. Here in the United States, though, what are we going to see today in the market? What's driving the market? Earnings. Saw a lot of Dow components report this morning with pretty good news. And obviously after the market today, we're going to see Apple report their earnings. Stocks up pre-market. Apple tends to historically under promise and over deliver on earnings. We'll see if it's still doing that, especially down here after its slide from 706 or 705 down here to just shy of $400. I still think it's over with for Apple. I think it sees 350 before it sees 550 again. Just handsets are their margins are under pressure. Apple needs to come out with another big thing in order for it to really regain its luster and get back up to the altitude that it was residing at for a while there. I just don't see, I see Samsung, Google, all these handset makers, the once very rich margins that Apple enjoyed are going to be under pressure until, as I said, they come out with the next big thing. Finally, on gold, I thought this was very interesting. Goldman is closing it short on gold, which might be a time to get back into the yellow metal. You'll remember 3-4 weeks ago, SocGen came out with a hey, it's over with for gold report. Then Goldman Sachs about 2 weeks ago came out with an it's over with for gold report. And then obviously last week, the commodity sell-off last Friday followed up by Monday. Just absolutely brutal sell-off in the yellow metal, being used as a buying opportunity now. So we're going to talk about this this morning in our primary live trade brief about it might be time to get back into the GLD and get long gold. If Goldman's closing their short, it might be time to buy. Okay, got to run. Got a primary live trade brief at 0900 this morning. Primary live trade brief, good hour and a half, 2 hours of a strategic overview of what's going around the world economically, operationally here in the United States, and then we take a look at individual tactics that we can add to our model portfolio to achieve our mission objective that we lay out each live trade brief. Okay, so happy hunting. Make sure you hedge, and I'll be back with tomorrow's SITREP. We'll see you.